Because I know that there are business owners, some of you listening, who have been in this situation for years, for 3 years, for 4 years. You've been looking for someone to fund, looking for some funding, to get new equipment for your manufacturing, to get new equipment or to buy land to build your factory for, say, oil, palm processing, or to build some kind of plastic manufacturing industry, and all kinds of great ideas that you have. But it seems that you can't move forward because you've come to a point where apparently it looks like the major block you're having is capital. So we're talking about how to raise funds for your business. I'm doing this for a couple of reasons, maybe two major reasons. Number one is, a few days ago, I ran a poll on Facebook, LinkedIn, and then I asked people what was the problem that they were dealing with, whether it was in their personal lives or it was in their businesses, that they would like me to solve for them for free, and that if I did that, they would be so excited and so happy that I solved the problem that they would immediately wire me some money in my account. And then surprisingly, or maybe not too surprisingly, most of the things that people shared had to do with financial challenges. And out of all those financial challenges, most of them had to do with funding their business, funding their small business. And so that's why I'm doing this. The second reason I'm doing this is, over the past couple of years, what I see out there in conversations in the business circles is that the biggest problem or the biggest challenge to growing businesses in this part of the world was lack of capital. As a matter of fact, I think it was yesterday or a few days ago, Tony Elumelu on his page on LinkedIn referred to this same issue. He said that lack of capital, access to capital, was a major challenge to businesses here in Africa. And I guess that's the reason that he started the Tony Elumelu Foundation, where he gives some young entrepreneurs across Africa some money, to start business. Maybe there's a third reason I'm doing this. The third reason is, I have been involved in virtually all the major business plan competitions in Nigeria in the past couple of years. So I have been in the UWIN panel. I had been in before Diamond Bank went under, they used to have this BET. I was in one of the panels. EcoBank also ran a business plan competition. I was in that panel. I've been in panel of several business plan competitions. And so I've had the opportunity to have literally hundreds of business owners, pitch their business plans, to me. So I've listened to, and I've also reviewed literally hundreds of business plans. And I came to the conclusion, which is actually opposite of what everybody thinks. Everybody thinks that problem is lack of capital, that the problem is lack of access to capital. But my experience and the data out there, what I've experienced listening to hundreds of business plans and just working with hundreds of businesses, the problem is not so much access to capital. And I'm sure that we're going to be talking about them today. First, I'm going to tell us a few stories to bring the key ideas of what I'm going to be sharing today. I'm going to be highlighting some key ideas through real stories, real life stories of some of my clients and then acquaintances. And then I'm going to tell you exactly what to do going forward. Apparently, you're listening to this because you are interested in this subject, or you are even a business owner having issues with getting funds, getting the capital to fund your business or to grow your business. So I'm sure that we are in for a very, very exciting right today. So, but it's not just going to be information. I'm also going to tell you exactly what to do to change your situation. Because I know that there are business owners, some of you listening, who have been in this situation for years, for 3 years, for 4 years. You've been looking for someone to fund, looking for some funding, to get new equipment for your manufacturing, to get new equipment, or to buy land to build your factory for, say, oil, palm processing, or to build some kind of plastic manufacturing industry, and all kinds of great ideas that you have. But it seems that you can't move forward because you've come to a point where apparently it looks like the major block you're having is capital. But I'm going to prove to you that capital is not the problem. And actually, I can start with one of those stories, that capital is not actually the problem. And when we are done, I'm also going to let you know what investors look for. What investors look for. There is money. There is money. There's capital. There's no lack of capital. But there are certain things that the investors look for before they can commit their funds to you. And I'm going to tell you exactly what those things are. And I think it's really good. Okay, so first, let me start, because I work with businesses, I work with CEOs, and I've worked with hundreds, literally hundreds of CEOs. Both those that I worked with during my time with Stanford Seed, and also those I work with and I've encountered in my in the classrooms in the MBA programs at Lagos Business School, and some other private clients. So I would come to the conclusion, not something that I've read in textbook or anything, but based on what the work I do, I've come to the conclusion that the CEO or the business owner has three major obligations, three major tasks. The first one, the most important responsibility of the CEO, is to define and to maintain the culture of the organization. To define and to maintain the culture of the organization. As a matter of fact, if you want to build a business that will last for 100 years or several hundred years, the key secret is culture. And then many of you here are familiar with what Peter Drucker said. He was a management guru that dominated the management sciences of the 20th century. So he said that culture will eat strategy for breakfast. Now, when I did my executive coaching certification in Florida in the United States a couple of years ago, what I focused on, because we were required to do some mini project and presentation in order to complete that program. And what I focused on was, why is it that some businesses, especially businesses in Asia and Europe, why is it that they have lasted for hundreds of years? In fact, there's a business, one of the businesses I studied in Japan, that company has been in business for over 1,400 years. And they are still in business today. Okay, and they started with constructing temples, so they're into constructing temples and all that. Now, then there are other businesses in the UK, in France, in Germany, that have been there for 600, 1,000, 1,200 years. In fact, Stella Artois, the beer, one of the businesses I studied, Stella Artois, the Belgian beer, is over 650 years old. I also studied Twinings. Twinings is more than 350 years old. And then the secret, one of the things I found among those businesses was consistent culture, a performing culture. And so one of the important roles of CEOs is to define and to maintain and to embody the culture of that company. The second role of the CEO is to make sure that the company does not run out of funds because we are told that cash flow is the blood, or cash is the blood of business. So the day your company runs out of cash, that's the day the business actually dies. And I think that's why some of you are here. If your company is starved of funds and of capital, then that company cannot grow. So it is one of your responsibilities as CEO, as business owner, to make sure that there is a healthy supply of capital in the business to grow the business. And that is actually what we are talking about today. Of course, the other major task of the CEO is to act as the chief ambassador of the brand, representing the business, speaking for the business. Of course, other employees, everybody in your organization is an ambassador of the brand, but you are the chief ambassador of the brand of the company. Okay, so number one, the major problem is not so much as capital. And then the first story I want to tell is of a friend of mine who runs a business in the health and beauty, in the beauty care industry. So Nkechi owns a business called Blemish Care, and you can look up Blemish Care. Now, she started her business hawking, just hawking, taking things to, she showed me some of the places she went to hawk her products as a youth service person, and even before she did her youth service while she was in school. So she started hawking, selling from door to door, selling in motor parks, in garages, in different places, in schools. And then she graduated from selling, just walking around and selling these things, to selling her products from the boot of a car. So she would drive to different places and sell her product. So as she was turning over, she was increasing her capital. Okay. And so as I talk with you right now, Nkechi of Blemish Care, in fact, I've told Nkechi that she's going to speak in one of my programs. I'm starting a nationwide radio program very soon to bring to the limelight, entrepreneurs that you never hear about, but they're actually succeeding even in this environment and doing very well. So as I speak with you, Blemish Care is now doing business in the hundreds of millions, and they have assets worth billions. This was just within a period of 8 years that she went into, she came from hawking things along the road, selling the boot of her car, to running a billion naira business, business that is worth billions. So today she imports things. She has manufacturers in China. She brings in containers of goods every single month. So that's the volume of business she's doing. But this is what I find very interesting in what Nkechi told me. So she said, Obo, I have never borrowed 1 kobo from the bank. And her business has grown and continues to grow astronomically. So could it be that there's something Nkechi knows that the average Nigerian small business owner does not know about how to create capital for her business? So that's story number one. Then the second story, I was listening to Bradley. Okay, it's a very good gentleman to listen to. I was listening to his podcast a couple of days ago, and then he told this story about one of his students that went within a 9-month period to being in the negative. So within this 9 months, she was working on some special beads, handcrafted beads, some kind of art or something, and her family members were like, why don't you quit this thing, go get a job? Then at some point, the bank called her that her balance, was minus $12. So she was owing her bank, $12. It was in the red. And then something significant happened. Between the time that the bank called her and then she launched that product, she launched the product that she's been developing for 9 months. Within 24 hours, she went from minus $12 in her bank account to $1.2 million. And by the time she finished running that challenge, she got $2.3 million. Could it be that there's something that Bradley's student knew or knows that some of us don't know about raising capital? Could it be that where you are today, you are just one offer, one brilliant marketing idea or something away from all the capital that you ever need? So the other story has to do with one of my clients. So he wanted to take a loan, a big loan, like 200 and something million from a bank. They had signed it, they wanted to. But after interviewing him and looking at his business, I told him, do not take this money, because if you take this money, you are going to, your business is going to go down. And then the reason is, if a business model is fundamentally flawed, it does not matter how many millions or billions you pour into it. If you pour lots of money into a fundamentally flawed business model, that money is going to sink. That money is going to go, and the business is also going to die. So you do not save, you can never save a business by throwing money at it. You can never save a business that is poorly run, a business that does not even have clarity around its market, around its competitiveness, around what the market wants. You cannot just throw money to that business and then immediately solve the problem of the business. Okay, so now, which also leads me to the other story, and that's about the cost. I don't know whether it's Coscharis or Coscaris. I think it's Coscharis, man, the Cosmos guy, one of the Navy billionaires. So he told this story in a program that I co-moderated, some years ago in Lagos. How a bank came to him and gave him 32 billion naira loan to do something. So there was no signing of anything, there was no whatever. So they just gave him the money. Now compare that to you yourself. If you need money today from the bank, they're going to ask you to bring your mother, your grandmother, your great-grandfather, and then they're going to ask you to bring land documents and all kinds of things that just make it very, very difficult for you. But here is Cosmos that the bank is giving 32 billion naira without collateral, without anything, just that recognition for who he is. So the question is, why would you find it very difficult? What is it that makes it very difficult for you to secure capital, but makes it so easy? Why do some people find it much easier to access capital than the others? If you can crack that gap, it's going to be a huge jump in insight for you. Why is it that it's so difficult for other people to find capital, and then it is easy, very, very easy for other people to find capital? And that's a very, very important question, because if you can crack it, then you know that it's not witches and wizards that are keeping you from accessing capital. But you find out what that thing is, and then you do what they do, and then you get capital. Then, which brings me to the first insight. Stop looking for capital. Stop looking for capital. Instead, start attracting it. So you can actually put that down in the chat. Okay, so I'm just taking a look at some of you who have joined. Thanks, Precious, and Abigail. Yeah, thanks, Miracle. Thanks for being here. Okay, so type in the chat, stop looking for capital. and start attracting capital. They are two different things. You see, people like Cosmas, of course, cherries, do not look for capital. They attract it. And then it's also interesting what I'm telling you right now, because a few weeks ago, my bank called me. They want to give me money. The bank manager met with me and is asking me that they have facilities to give me, that they want to do business with me. And of course, I'm not taking their money, not yet. Because the other thing is that the best time to borrow money from the bank is when you don't need it. It sounds like, is that what they call irony or oxymoron or something? So the best time to borrow money is when you don't need it. Please also put that for me down in the chat. It's another major highlight. The best time to borrow money is when you don't need it. So, and that's what happens when you begin to attract capital. So there are many people, there are many investors, they're with their money begging people. There's actually capital begging businesses. And so that's where, so the question is, how do you take your business to a place where you don't need money at all? And then it's money that is needing you. Okay? So note that the first idea is that no matter how much money you sink into a poor business model, you will never save that business. And I think that has already begun to give you the hint of where I'm going. Because it is your business model, is how compelling your business model is, that will begin to attract the fund. But the weaker your business model, the more you will need capital. So if Nkechi could grow a 2 billion naira business within 8 years without taking a single capital, so can you. And that's a manufacturing business, that's a product business. Okay, so can you do that? Okay, the other idea is that you should seek to first grow your business organically. So that's what I mean, that the best time to borrow money is when you don't need it. Because you've already demonstrated that your business can grow organically. That is, it's growing organically without input of either equity or debt, So it's growing organically. You've established that this business is a growth business. That is the best time to look for capital. And then by the time you get to that point, you won't even look for capital. Capital will look for you. So I had a meeting with a venture capitalist, So this gentleman contacted me through LinkedIn because people had given him my name because they said that if they were looking for a business, somebody who can recommend businesses for funding, that they should talk to me. Yeah, and there was a reason that they referred him to me, because at the time I was working as Stanford business advisor, transformation business advisor. So I was very exposed, to what is happening in the venture capitalist industry here in Nigeria. So eventually they flew in, and then we had a meeting in Victoria Island. And pay attention to this story, because it is amazing. It's just going to blow your mind, and it's going to shatter what you ever believed, what you ever thought, that capital was a problem, because it shattered it for me, that the capital is not the problem. Please, I just want to pause and have you write this. Just write it down in the chat, because this is key. Okay, capital is not the problem. Capital is not the problem. Please just type it in the chat. Capital is not the problem. Okay? Capital is not the problem. Okay? Excellent. So now, I had a meeting with this venture capitalist. So at the time, there was a company in Jos that they were funding, and so that company is into tomato processing. So they were pouring in a lot of money, and then at the time that these people came, which is actually what makes this story very interesting. At the time we had this meeting, it was the peak of the terrorist attacks in the north of Nigeria. It was a peak of terrorist attack. People were being murdered and killed, and then the news was filled with all kinds of bad news in Nigeria at the time. So now I asked him a question. He and his colleagues, there were two of them, who met with me that day, from the US. So I asked the man a question. He said, so I asked him, Jeff, does it not bother you about the news and the terrorism and things happening in Nigeria at this time, and then you're bringing in your capital to come into this country? Both of them looked at each other and laughed. They said, Obo, that you have no idea the places that they've put their money. And they mentioned particularly the Philippines. And as of that time, it was really horrible in Philippines. I think there was a leader, who was just crushing the citizens, crushing cars. There was fighting, killings, and all kinds of things going on there. And they put in tens of millions of dollars in the Philippines. So it looked to me that they actually look for the riskiest environment, because for some reason, according to them, that's even where they make their most. So even with all the stories that people are telling about Nigeria right now, this is still an investment destination if your business is the type that attracts capital. So now, the final part of what I'm telling you is now, so what do investors want? Now, the investors could be the venture capitalists, it could be angel investors, like myself and like other people. So the most important question you really want to ask if you need capital for your business is, what do investors want? If someone, whether it's an angel investor, or is a venture capitalist, or is a bank, or it's some organization, that funds business, what do they want? So that is a fair question to ask. That is a very, very important question to ask. What do investors want? What does capital want? And so what I have discovered working in this space for all these years, for over 10 years, is that most business owners in this part of the world are actually not looking for capital. Inside them, they are really looking for grant. They are really looking for free money, if you like. They're really looking for free money. And so many people, during the first iteration of the You Win, during Jonathan's administration, many people got the money. When they were given the 10 million naira grant and things like that, some of them bought cars, some of them traveled abroad with it, some of them whatever. You see, because there isn't quite that kind of accountability with grant. And that's the major difference between grant and capital. Capital is very highly accountable, and capital is very, very highly responsible. And so before you can get the capital, you've got to ask, what do the capitalists want? What do the people who have this money want? Okay, so let's explore some of the few things that they want. But at the basic layman level of what people who put money in your business, anybody who will put your money in your business, the very first thing the person wants would be that his money at least will come back, and that his money will make that his money will come back, and that the money will come back buoyant, basically. Because people who have capital do not, so capital is different from charity. So you find that the way some people position their capital requests is as if they're looking for mercy. Okay, so they come to you and they say something like, oh, if only I can find 15 million naira now. if only I can find 15 million naira, I'll buy land, I'll buy this machine, I import this truck. You know, that's not how you look. Nobody will give you money like that. I asked that question, what problem are you dealing with right now, that if I solved for you, you would immediately wire me 1 million in gratitude if I solved that problem for you for free. And then the answers were very interesting. You know, the people were saying, oh, just give me the 10 million naira. Yeah, you can get the 10 million naira, but you're going to have to go for lottery. You're going to have to go for lottery to get that one, because capital is not free. So if somebody puts 10 million naira in your business, he wants something back, okay? He wants the money to come back, and then to come back with interest. So the first thing is that investors want their money to grow. They actually want guarantee. They actually want guarantee that they can trust you and that their money can come back. Nobody will give you money if they are not sure that their money will come back, and if they are not sure that their money will grow. And so many people approach me, they write me they DM me on LinkedIn, and they say, oh, okay, they have this business, and then please, that they're looking for such and such million, whatever. And then you expect, just based on what? Just based on sympathy. And you've not even told me what the business is about. You've not given me any numbers. You've not shown me any proof. It's just that inside you believe, oh, it's a very hot business. It's very, very good business. It's wonderful. It will bring a lot of money. Oh, if we do this and all that. And that's the way Nigerians, look for funds. They tell you, oh, in fact, there's this thing. If we can export garlic now, that is the garlic season, and there is somebody in Italy that is looking for garlic. He says, sir, if you give me 5 million naira, we will just export garlic. No information, no document, nothing. Just give me 10 million naira like that. Nobody does that. So you see, that's not how you look for capital. All right. So if you look up the word capital and then you look up the word grant, they are completely different things. Okay. So we shouldn't mix both of them. Now, therefore, to ensure that their money comes back, there are certain things that venture capitalists and angel investors look for. Chinedu mentioned something about business plan. Yeah, that's business plan, but actually beyond the business plan, it's not just because anybody can put up a good business plan, and people hire people to do business plans for them, and people write up business plans for them and then pay them lots of money. But it's beyond business plan. Now, venture capitalists have this incredible way, maybe because they have filtered through thousands of businesses and business applications and business plans, over the years, so they can sniff out the DNA of a business that can do very well. Sometimes they miss it. Like if you watch Shark Tank and similar, whatever. So there have been some great ideas that they missed, that did well, but many times they get it. So now, what is it that they look for? What is that DNA of a business that will succeed? Number one, they look at you and your team. So the question is, who is this guy? Have you found out that people who have received capital before or some funding, those people you call serial entrepreneurs, have you discovered that they tend to get more capital, like anytime they want it? They tend to get capital. So they just finish one business and they raise $100 million in that one, then they start another one, and they are very likely to attract it. So they look at you, they look at your pedigree, they look at where you've been, they look at your history. They study those things, because you see, they are not just putting money in their business, they're also putting money in you. So your character, your competence, your skillfulness, your innovativeness is a critical part of what people who want to do business with you. because those guys have trodden the path. They've trodden the path. So, and they've raised money before. Flutterwave, which happens to be one of my clients, they've raised money before. They've raised, like $20 million. They've raised $170 million. They have raised, I think, something much higher, double that. So they look at track record of that entrepreneur and what you can do. So that is really very important, your character, your competence. And then they look at the team. Who are the people in your team? Who are the people doing these things? And so for many of you in small businesses looking for money, they don't know you. You've not demonstrated any track record. You've not shown this is what you've done before. So this is why it's important to do something to achieve success, even in a little measure. So when I was in panels of some of these business plan competitions, some people would come in, like during the U-Win, that I was in the panel. So some people would come in and they would pitch their business and they would say, okay, we want 10 million naira. And I asked them, what have you done before? Have you managed 100,000 naira before? No. Have you managed 50,000 naira before and turned that 50,000 naira into 75,000? No. So now, if you don't have the competence, the character, the skills to be able to turn 5,000 naira into 6,000 naira, there's no guarantee that if we give you 50 million that you can turn it into 60 million. No. Okay, so they look at you, they look at your track record, they look at what you've done, and they look at the people you have around you. Are you trustworthy? Do you have the skills? Are you the kind of people? Do you have the kind of leadership adaptation to be able to make this thing happen? Are you the kind of person that will jump ship? Like if there's a problem midway in the business, you would drop that business and then run away and take your family to Canada or to Australia. People do that. So they look at all those things and they look at you, they study you. So that's important. The other thing that they look at is whether you're working on a growth opportunity. Is this business a growth opportunity? Is it a sunset market or is it a sunrise market? Because nobody puts their money in something that they are not convinced that is a growth opportunity. So is this really something that would spread, something that would grow big? Many times, recently, I don't know how many of you know Kuda, the Kuda Bank. Please, if you do know Kuda Bank, I just want some kind of interactivity. Just put on the chat that you know Kuda. Just put Kuda there. Sometime last week, their financials came out and then of the previous year, and they made 6 billion naira loss. Okay, so Kuda made 6 billion naira in losses, and people were reacting. There was all kinds of whatever. Okay, this online thing, this bank, maybe we should go and take our money out of the place, and all that, because they made 6 billion naira loss. That's a lot of money. But it was interesting, seeing it from another angle, So one gentleman explained, and then he was really right, that Kuda is a great growth opportunity, and that investors, despite that loss, will still put in money. But then the other interesting thing I noticed looking at their figures, I don't remember I don't know the specific figures, but it looked like the previous year, the year before this financial year, it looked like they had made a loss of 8 billion or something like that. And then this time, so they actually gained a little bit, because the loss is now 6 billion. But there's a reason that the investors will still pump money into Kuda, because you see, payment in Africa, in Nigeria, in Africa, is still at its very, very serious infancy. And then the number of transactions that they are making, the millions and hundreds of millions of Africans that are still unbanked. That's a huge opportunity. So the investors are looking at this things. They are not looking at the short term, okay, they are losing 6 billion. So sometimes you wonder, are investors mad? When Microsoft purchased LinkedIn, I forget for how many billions. I forget whether it was for 26 billion or something like that. I forget at that time that they purchased LinkedIn. The balance sheet of LinkedIn was reading about $160 million. So now they weren't buying just that cash in the bank of 160. You can imagine 160 million. That's what they had as cash. But then they bought them a whopping 20-something billion dollars. Why did they do that? Because of growth opportunity. Because they had a database, they had a following, and then this following represents incredible monetization. That's why companies like Flutterwave, that's why companies like Kuda will continue to raise hundreds of millions of dollars, even though it appears that they are running at a loss. So you have to understand the way the investors' minds work. They're looking at the growth opportunity. They're not just looking at, okay, is this business making 1 billion now, or is he making whatever, So they look at the growth opportunity, and then they try to see, what's the market size, what is the innovation potential, how competitive is this product you're bringing to the market, and how sustainable is the profitability. So they look at all that long term to see, do you really have an opportunity? Okay, so I've already mentioned that they look at who is behind the team. All right. Then the other thing I want to mention that's also very important, from my experience working with businesses in Nigeria, in Ghana, in Sierra Leone, in different parts of the continent, is that the point I wanted to make it just escaped me temporarily. Okay. So they want to know, people who are putting money in your company want to know how invested you are in that opportunity. And because sometimes people come to ask you for money to invest in their business, but then you look at, they don't have any skin in the game. All right. So if you're so convinced about this opportunity, you have land, you have houses, you have some assets already, okay? But you are telling me that you just need 20 million naira. If once you put 20 million naira in this business, that you're going to, within 1 year, it's going to turn into 200 million and things like that. So, sir, they said to me, so just give me half of that. Now, but this guy has a plot of land somewhere in Abuja. He has a plot of land somewhere in Abuja that he could easily sell for 150 million. That he could easily sell for 80 million naira. So if he's looking for 10 million or 20 million, so what's going on at the back of my mind? If you get 20 million and you can make it 200 million within 6 months, according to you, and then you have a plot of land that is 50 million. You say, just like I'm saying. You say, So what's keeping this guy from liquidating this thing? Because that's 50 million and he's going to make 200 million. So you can always buy it back. So people don't have a skin in the game. You don't demonstrate that you have a skin in the game, that you're committed, that you're not going to abandon ship and then abandon me and my money and then run away to Canada. Which people are doing every time. They abandon the thing. When they say the economy is very hard, then they abandon it. With the people they are owing and everything, they abandon. If you've had that kind of experience, or you've heard it, just put it down in the chat. People who borrow money from friends and all that, they are running a business. But then the next thing you hear is they are in Canada or that they are in the UK. And then that's how the money is gone. And Nigerians do a lot of things like that. And then people in those days, would get the loan or the grant, the UN grant, and they will go marry a second wife or they go buy a car and do all kinds of funny things, like that. So to bring it to an end, what should you do? What is the most important action that you should take if you find yourself in a situation that access to capital is stifling your business? Your most important task, and then the number one task, is to grow your business organically, to clarify your business model, what you're actually doing, and see how you can scale it down. Okay, see how you can scale it down to a point. Don't be in a hurry to grow. There's enough time to grow. But how do you demonstrate growth? How do you demonstrate soundness of management? How do you demonstrate soundness of financial management where you are, right now? Because before investors put money in your business, they are going to look at your books. They are going to look at your finances. Okay, they are going to look at it. Okay, and so focus on growing your business organically, because if you are growing it organically, and you'll be able to know where the leaks are, and then you plug them at this smaller scale before you grow. Because if you don't plug the problems, the leakages in your business when it is small, when your business is still doing 1 million naira, if you don't plug those leakages, if you make the mistake and then you put 100 million into it, you just magnify the leakages. So you need to clarify your business model. That's number one. You need to clarify your market, and then you need to build an investor pitch. Those three things are things that you need to do. So number one, so we're talking about the strategy is to grow your business organically. And how do you grow your business organically? These three steps. Number one, clarify your business model. Your business model is basically three things: how you create, how you deliver, and how you capture value. Critical. And then who you actually create this value for. Okay, so clarify your business model, clarify your market. Do you even know your market size? So many people are operating in markets and audiences, and they don't even know what their market size is. And that's the critical information for people who want to put money in your business, in raising capital. What is the size of the market? Okay, so what is the size of the market that you're playing in, and then what are the growth potentials in this market? So you need to clarify that. And then number three, prepare your investor deck, your pitch deck. All right, and you don't have to wait until you want to talk to an investor before you clarify how to ask for money. Because how you asking for money is a skill. It's not this thing that we do in this part of the world. You just DM somebody or send a WhatsApp message. Please, I'm looking for where I can get 5 million. Where I can get 5 million naira so I can buy this equipment, this machine, and do this and do it. That is not an investor speech. That's not what you take to. Okay, there's a way you communicate about opportunity, and it's so compelling that people come begging you to give you money. All right, so that's the investor's pitch, your pitch deck. So you need to complete that. And so if you are in that position, and then you would like to work with me to help you to clarify all these things and then make you investor ready. In fact, when I've done this with some clients, at the end of it, they don't need the money again, because you've not even exploited all the income and revenue opportunities in what you're doing, even at the scale you are right now, because there are so many leakages in your operations, so many leakages in your management and leadership of the company, so many leakages in your business model. You've not even exploited all the opportunities that you have, even at your current scale. And so when I did it with this client at Enugu, that I told not to take the money, the 200 and something million that the bank was giving, until he has clarified his business model, clarified his market, and then prepared his investor pitch. By the time we finished, after a couple of months, he came back to me and said, "Thank you, Obo. Thank you that you kept us from taking that money." Because if they had taken that money and put it, it would have compounded their problem. Because you're putting in money into a business model that was broken. Operations were broken. Your human resources were broken. The people you're working with were not engaged. They were not engaged employees. They were just people, who just do the work anyhow there because they want monthly salary. But by the time we turned them into people who were mission oriented, who were aligned and engaged in the company, and then by the time we clarified their market and their business model, they discovered that they didn't need that money all along. Okay, so you can work with me to clarify that. So if you have the funds to invest in working with me, we can look at it. We can clarify your business model, we can clarify your market, and then we can help you to prepare an investor speech. And then by the time we even finish that, you will discover that you didn't need money, and that, like in Kechi of Blemish Care, you can actually grow your business to billions without taking any money from the bank. And then by the time you grow it up to that point, you can have money pursuing you rather than you pursuing money. That's really where you want to take your business, to a place where capital is pursuing you, not you pursuing capital. It's a terrible place to be when you have to start running and pursuing capital. But let capital pursue you. Like I told you, my bank manager here called me. We had a meeting. He said, I want to do business. We want to give you money. But I looked at the kind of thing I'm doing, and I'm like, what do I need the bank money to do what I do? So I told him, okay, that I'll think about it and then we will talk. How would you like to be in that kind of position where people want to give you money? Because you've built a brand, you've built credibility, you've built track record that you can actually grow what you're doing. That's a great place to be. All right, so if you would like to work with me, I can send you the details. Just DM me after this, and then we can set up a Zoom meeting and then have a 15 or 20 minute strategy call, and then we can take it on from there. I hope this has been very, very useful to you. I did this because I found that a lot of people are thinking that access is the obstacle, that's the problem, access to capital. But capital is not a problem. And I hope I've demonstrated that capital is not a problem. The major problem is actually positioning your business to attract capital. I think I've actually, I just captured it better, than I've been trying to say it, so positioning your business to attract capital, and then bringing yourself to a point where you don't need capital, but capital needs you. All right, so what I'm going to do, I think we can take the next 5 minutes. If you have a question, you can type it on the comment, and then I can take it, for another 5 minutes before we round it off. Yes, you're welcome, Obi. You're very welcome. Mwachuku, yes, you're welcome. Yeah, Precious, yeah, you're welcome. I'm glad you were part of it. Yeah, Madam Patricia Uchi Obo, yeah. Yeah, positioning your business to attract capital. Awesome, that's correct. Yeah. All right, so if there's no question, it's okay. You can still go ahead and put it, and I'm going to let this video stay up, and so you can always go to the comment section as well and type your question, and then I can always take it offline. Okay. In the meantime, yeah, Jamila, thank you for showing up. Yeah, thank you for showing up. Yeah, so in the meantime, keep showing up, because you have no idea what's coming your way next, and then we'll have another session soon. So bye for now, everyone.